What's up everyone, it's Karthik with MoneyVest. Welcome on board for our market open live stream. Hope you all are doing great and are having a great start to the week. So you might notice a brand new place. So this is going to be my new apartment that I've just moved into last week. So I really wanted to do my first ever live stream with all of you guys in this new place. So good morning, good morning. Thank you so much for joining. If my audio and video is good, just give me a thumbs up and we should be all set and all ready to go here. And like I said, I just want to make sure the audio and the video is good and then there are no technical difficulties. Fingers crossed. I had the Wi-Fi moved over from my previous place to this apartment just a few days ago and I haven't had any issues with connectivity. So just give me a thumbs up if the audio and the video is good. And we are ready to do this. So markets, pre-market, how are we looking? So QQQs are slightly up over 60 basis points right now. This week is also really important for inflation and unemployment. Both of those things are going to be coming out this week for the month of November. So obviously, fully economic packed week here is what we have. We do have the S&P 500 pushing up over 0.5%. Tesla's pushing up over 1.7%, and Nvidia on the day right now is also pushing up over 1.3%. So portfolio is indeed moving up over $4,000 on the day so far for the options portfolio, and open P&L sitting just shy of $105,000. And my plan is to close a lot of my calls, which are going to be these ones. I'll go over them in just a minute, but there's going to be a lot of calls that I am planning to close for over 85 to 86% profit, and then open new ones. And then I also do have the meta calls that I also have to sell. So folks, do me a favor and share this live stream with as many people as possible. And please do let me know if the audio and the video is good. So just want to make sure there are, again, no technical issues, but please do me a favor and share this live stream with as many people as possible, with your friends, family, other traders, investors. The more people we have, the more engaged the discussion is going to be. So yeah, today is a special day because I wanted to do my first live stream in my new apartment as a public live stream. So again, thank you so much for being here. I really appreciate you all. And it's a new chapter in my personal life. So definitely wanted to kick things off on the right foot. So we're gonna make this super engaging, super valuable for you guys. I want to cover as many stocks as you guys throw at me in the next 45 minutes, however much time we have together. But that's the whole point, right? I really want to help and provide as much value as possible, and really lead by example. So just not talk about it, but also do it and show you transparently exactly what is possible, because there are positions that I'm down on, right? There's going to be stocks that I lose money on, and there are stocks that we make a lot of money on, but that's the game, right? That's the whole idea behind investing and trading, is you win some, you lose some. You just have to make sure that you win more than you lose, and you win by a lot more than how much you lose also. So both the frequency and the amounts is what matters when you are trading and investing, because at the end of the day, it is really a game of probabilities. So I like the dark side of the moon frame better than that background though. So yeah, I mean, it's been crazy. And if I show you guys the view, it's one of the best things that I wake up to. It's like incredible. I love it because it's got a really large balcony, which I'm going to convert into like a nice garden terrace. I've already put the waterfall up front, and it's going to be a very nice area to just chill, relax, and you get the entire skyline view. And I'm going to put some plants and trees outside just to get connected with nature, because you get the direct sunlight. You get so much sunlight in this entire apartment. That's one of the best things, which is exactly why I'm not putting any curtains up there. So you've got very large windows and zero curtains, because I want the sunlight to be hitting inside the dining and the living room every single day. So I love the sun, I love the water, and I'm gonna plant some trees, and I would love that as well. So it's a dream place for me. To be honest, like, I'm very blessed with that. So yeah, no need for fancy backgrounds, just caddy, good video, and a microphone. Literally, like I've recorded videos in so many different places. So for me, obviously the location and the background doesn't matter at all. All we really need as a community is spreadsheets, microphone, and video. That's it. That's all we really need. That's how I got started, and that's how it's going to be for till the end of time, right? For me, literally, that's it. I don't need a fancy background, don't need a fancy chair, don't need one of those desks going up and down and crazy. Like it's just, give me a place to record my videos. Okay, let's talk stocks. What do you guys have in mind? What are you trading? And I'm here to cover it all. So let me know. What is it that you want me to go over? I'll talk about some stocks that I'm planning to trade because my BITX call is up $533. So this one's up 83%. As a rule of thumb, we have talked about this. Anything over 80%, 85, 90% is a good profit that you want to take. Right? You want to close those out and rinse and repeat the process, right? So the goal would be to sell a new call on BITX after I close this one. So it's 83% up. This one will most likely be gone either today or tomorrow. The iron call is also up 84%. So $477 for this one. I will be registering that profit. And then iron also is up 87%. The $50 call, right? So up almost 90% on this, $161. We'll lock this profit in as well. NVIDIA. Now this one is a very, very interesting one, right? So this was a covered call after subsequent rolls. I've been rolling this over and again. Finally got it up to 187. NVIDIA right now is trading lower than 187. It is trading down to as much as 177. So it's actually $10 outside of the money. Pre-market is pushing higher, so we'll see where this opens. But this does expire in 1 month. So it's 30 days till expiration, right? So January 2026, literally 1 month from now, because today is the 15th and this option expiring on the 16th. So 1 month from now, I can still capture an additional $770 in the next 30 days. So that's going to be the plan. I'm not planning to close this one out yet. I'm going to keep it for maybe another $300-400, and once I get that, then it's going to be gone. But I am up quite a bit, right? So I don't want to lose that profit either. It's $3,200 profit on this covered call that I really want to capture. So for NVIDIA, 187, if it gets up to that level in the next 1 month, which is a possibility, then I'll see if I want to roll again or if I want to let my shares go. 200 shares, that's all that's on the hook. The other ones are September, so they're up over 25%. Or $6,500. And the beauty of selling options, which is exactly one of the reasons why I do encourage more and more people to look into options trading, right? If you are a buy and hold investor, that's completely fine. If you are going to be investing long term, that's great. I do that as well. But having a strategy for options and having a sense of how options trading works can really allow you to hedge your positions really well. Reason being is because just between these 8 calls that I've sold on NVIDIA, they have profited over $9,700, almost 10 grand, That's from these 2 NVIDIA options. And this is only 25%. There's a lot of premium left in this call. There's almost $20,000 left in this NVIDIA call. And that's the beauty of hedging with options, because if NVIDIA tanks, which it has been selling off, the position itself is going down, but the covered calls are going up. And so it's kind of offsetting a little bit of that damage, right? So the sell-off is not making my life as bad as what it would have been had I not sold any calls, if that makes any sense. So that's the kind of rundown. And of course, I'm going to be selling a brand new Meta call as well, because my Meta 100 shares are completely untagged right now. They're not attached to anything. I have been selling covered calls for 2 weeks straight, captured, I think, over $600-700 week 1. And another $400-500 in week 2. So I've already lowered my cost basis by a good, $10 to $12 in the Meta shares here. And so the plan is to continue to sell calls and continue to wheel the strategy. My cost basis right now is around $660. However, after considering the premiums that I've collected, the cost basis is closer to $645. So I can even go with at the money options, because Meta right now is sitting at around $644, $645. That literally is my adjusted cost basis on Meta at the moment. So I can even go with $645 or $650, but I would still go with a little bit higher because, if Meta rallies, I want to get that capital appreciation as well. So that's where we are with the entire rundown on some of the stocks that I'm trading. I'm going to be closing out my BITX call, closing out Iron calls, waiting for NVIDIA to show me some signs of potential weakness, getting a little bit more of that premium. Oscar calls are 57% up, may close those out a little bit early to sell new ones. We'll be selling calls on Meta. And then also we've been flirting with the idea for Tesla calls as well, because Tesla tends to do really well over these 1 year long time frames. So the plan is to sell a covered call on Tesla for the next year. So December 2026 for $700-800, and that's going to be a lot of premium. Like you get a lot of premium plus a lot of potential capital appreciation in case Tesla takes off, right? Beyond $500 or more. Right now, pre-market, it's already moving up. Good thing we closed out our $500 call and captured all that profit. So thank you so much, everybody. And that was the entire update that I wanted to go over for all the stocks that I currently have. But let's take a look at some of your questions. And again, feel free to type in any questions that you have. And please do me a favor, share this live stream with as many people as possible so we can have a good amount of people joining in and we can have a very engaged discussion with everyone. Any questions related to fundamental analysis, technical analysis, options trading, again, we're all here to help each other, support each other, and grow together. Nothing makes me more happy to see someone else succeed, make more money, and of course, generate incredible amount of returns from the market. That's the whole point of why we do this, is to help support each other. Okay, so let's take a look at Lululemon first. And I'm going to call out everybody. So again, it's just, I'm definitely going to be reading off a lot of the comments. So for Shaw, let's take a look at Lululemon. I'm just going to move this over here closer to the chat so it's easier for us. Okay, so Lululemon has been selling off, as you guys already know, although it's been Friday pushing up over 9.6% on the back of earnings, of course. It's coming up to that resistance here, closer to $209, $210. Now, 3 of the last 4 earnings, Lululemon had sold off, right? This time around, it's a little bit different. Obviously pumped over 9.6, almost 10% on the day. Support level is going to stay put down here at 186, 187 for Lululemon. And a resistance, of course, all the way up to $208, $209 for Lulu. If you do get a breakout above this, next target is going to be closer to 228, 229, and a much stronger area of support and demand is going to be sitting roughly at 165 for Lulu. So this right here is going to be a very, very important support level to watch for Lululemon. And another support is going to be down here, 186, 187 for this stock. Going over to Micron Adobe. So Micron has also been on an absolute tear over the last several months, just pushing higher to new all-time highs, literally more than doubling, in fact, tripling or quadrupling 300% since April. One of the best performing stocks of 2025. We got a very strong support down here, 196, 197. So this right here is going to be that level to watch for Micron, and a resistance, of course, stays put at 257, 258 for Micron as well. So we're seeing a lot of consolidation sideways for this company. Adobe, on the other hand, as you guys know, I've had a love and hate relationship with Adobe. Resistance all the way up to as much as 366. And of course, if we do get a breakout, that's going to be that lower high to watch for Adobe as well. So that is the entire downtrending channel of lower highs and lower lows, and support level now is going to stay up roughly at 340 to 344 for Adobe. So that's going to be that support level to watch. Okay, so technical analysis on QQQs. Before that, let's talk about Oracle as well. So Oracle, I'm also looking into some CSPs. I'm considering $180 strike for CSPs for Oracle. I think Temoff, you also asked about Oracle Netflix entry points. I think Oracle 180 is a CSP that I may sell on the stock. And then Netflix, we're looking at around $93, $94, possibly down to $82. So those are 2 stocks to, in my opinion, put on your radar, because these are 2 companies that are high quality, selling off aggressively right now. They're down over, I think, 20 to 30% from their all-time highs. So Netflix's case, it is down a little bit over 27%, so a little bit under 30%. And Oracle is down a little bit over 44%, right? So it's almost been cut in half. And it's actually quite crazy that I remember the day I had visited the US this year, September 10th, was the day when Oracle was reporting earnings, was Wednesday the 10th. And I remember, obviously we were talking about Oracle on the first day that I was in the US this year, and it had just spiked to 36%. This entire AI trade and an AI frenzy was getting crazy. And from those highs, that was literally the all-time high and the peak, it is now almost cut in half, 45% sell-off. So I think Oracle's valuation, and I would say that for most stocks, and this is not a bubble territory or bubble bursting territory. It's essentially just companies that are proven to have a very strong track record, just trading at very rich valuations. And all we're seeing is a little bit of repricing for a lot of these companies for what was originally expected to be a overpromise, and what we're getting is a bit of an under delivery from the AI trade, from the build out, for a lot of factors, right? So that's why in my original videos I also mentioned that I do not believe that this is an AI bubble, right? Bubble is for when you can't see anything, right? There's nothing there. Like, you can see through it and there's nothing there. But in this case, with the technology that we're experiencing and the evolution of artificial intelligence and just the overall tech landscape, there's very much something very real. And there's actual use cases, substantial use cases for artificial intelligence. Are companies trading at a rich valuation? Yes. Are they overpriced or overvalued? Could be. So that's really what we have to analyze. And Oracle, in my opinion, was one of those companies that obviously did not deserve to be trading at 300 plus. But now it's come down to some pretty attractive levels, right? So we're looking at around 180 as a potential support level to watch for Oracle. Okay, technical analysis on QQQs. So QQQs here starting to roll over a little bit. You could argue that this is a little bit of a lower high also coming in. So you can see that it is already starting to get a bit of that rejection there. We've got a pretty strong support down at 610. So 610 is going to be that support all the way down to these levels right here, around 583, 584 for QQQs as well. So that's going to be that quick technical analysis on Qs. Nice gains on NVIDIA. My 195 cover call, December 2027, Jojo. Okay, so you're a long ways away. I have that for Tesla. So if you look at my other Tesla call, so if I scroll this down, you'll notice that I have one for 732 days out. They're both in the money, by the way. One of them is exactly 1 year out, in the money 360 call. And the other one is the 370 call, which is 2 years out. So yes, I have that with Tesla. And this was more of an earnings play. This was never supposed to be a long-term hold, but it ended up being a long-term hold because I wanted to capture a lot of that appreciation. So you'll notice that the position itself is up quite a bit. It's up over $42,000. I think it's up like over 70 to 80% since the original entry, because the idea was to do a buy rate before earnings, but then stock ripped, which was very unlike Tesla on earnings, but it ripped and it kind of kept me in those positions. And I was like, okay, you know what? Let me just hold on to it. And then the roll got out a little bit out of hand. It's just one of those trades that it was mismanaged. I'm also human, right? I also make mistakes sometimes. So that was the story behind that Tesla call, which I do have for 2027. Okay, how do you trade with options, Pooja? So we have a full educational course. We have a lot of tutorials on how to trade options. This is something that I've been doing for years. Our community's been doing for years. A lot of our members are very successful. In fact, most of them are. So we focus primarily on investing long-term. Like, our focus will always be on picking high quality companies for investing long-term with good fundamentals, good balance sheets, good cash flows, good, growth potentials. And the 3 M's that we like to call them is the moat, management, and the market, which is companies with strong moats, defensible moats, good management, and a large addressable market, right? You want something that can grow into that market with a strong moat and a good management. If you don't have those, then there's going to be always some kind of crippling factor that's going to not allow for the company to get as big as what you want it to be. So those 3 things matter. Fundamental quality matters. So again, fundamental analysis can be broken down into qualitative analysis and quantitative analysis, looking at both factors, and then just kind of trading options on those, right? So not chasing premiums. It's something that we have talked about on the channel many times, even in the options course, like not chasing premiums, because when you are chasing premiums, you'll end up trading the wrong stocks. You don't want to be trading those companies anyway. And so our focus is quality first, I would much rather take one trade a year and make 30% per year. I would be the happiest person on earth if I just had to take one trade and make 30% on all my capital. And I'd be like, okay, a job well done, least amount of stress, least amount of friction, one trade, one and done. But obviously in reality, one trade is not enough, but still we can apply that principle, is that we want to take as few trades as possible and make the most amount of return as possible. That's always a big factor for me also, is because I don't want to chase after every opportunity that's out there, because then I will get crazy. I just want to, as Warren Buffett likes to call it, right? Operate in your circle of competence. You know exactly what you know what you don't know, and just trade where you feel confident. That's all it is. So yeah, long answer short, there's a lot of strategies out there. Options is just one of them, and we very much focus on it as well. Hey, Caddy, can you take a look at VGT when you get a chance? Yes, I think it's like a Vanguard IT ETF. It's going to be very similar to like a NASDAQ 100 or any kind of technology ETF out there. There's nothing really much for us to look into other than the fact that if you look at the holdings that this ETF has, probably some of the biggest companies in the world, right? I mean, you've got Microsoft, Apple, Amazon, Tesla, Nvidia, all of them in there. So if you are a growth tech investor and you're looking for something with a low expense ratio, it's literally 0.09%, offered by one of the biggest issuers in the world, Vanguard. And again, like I said, if you want to be looking at these companies primarily, there's nothing better than looking at VGT, right? Nvidia is in there, 18%, Apple's in there. I mean, these are the top 15 holdings, which I'm assuming make up for over 40% of the assets. I mean, it does start off pretty high, but then it just tapers off very quickly, because you've got Nvidia at 18%. A fifth of the portfolio is in Nvidia. And you got 14% in Apple and 13% in Microsoft. So those alone make up for 32, 46, right? So yeah, 44 to 45%. Almost half the portfolio is in 3 companies. And then you've got Broadcom, Palantir, Oracle, AMD, all high quality businesses that you would want to own long term anyway. So as I said, if this is something of interest, I really do like it. VGT is a great potential ETF. Okay, so Oracle, Netflix, we covered earlier. Eli Lilly, what is your thought on the target upside? So looking at Eli Lilly, again, healthcare was under a lot of pressure up until like the middle of this year, and then it just absolutely ripped. I mean, since August, healthcare has just gone into a whole different state of performance. Let's take a look here. So healthcare, I'm just going to bring up over to these sectors, and we're going to come over here. So which sector you think is the best performing sector on a year-to-date basis? So which one do you think? And I really want a lot of engagement. I really want a lot of people to participate during these live sessions. Which sector? There's 11 sectors in the S&P 500. Which sector you think has the best performance in 2025? And I'm talking about sectors for equities, not asset classes, because we already know silver is the best performing asset in the world right now. Year to date, it's up over 110, 120%. It's more than doubled. Followed by gold, followed by, Nvidia's up there. Google is up there. Google has done really well. Which sector you think is the best performing sector of 2025 so far? Let me see. So we got XLV, which is healthcare. We got comm services or communication services. We got energy in there. But I really want more participation. So I want more people to engage before I go to the next question. Okay, technology. Few more answers I want to see, and then we'll come back to it. So technology, got commodities. Commodities is an asset class. It's not a sector, right? It's a different asset class altogether. So I'm talking about sectors within equities. Is which one has done well. Again, metals, is a different commodity, right? Altogether different asset class. Okay, technology's in there, communication services and IT, defense and aerospace, semiconductors, AI related. So I don't even know the answer. Like I looked at it like a few weeks ago, and up until then it was technology and comm services. I'm going to guess it is still communication services on the back of Google. That's just going to be my guess, but let's take a look. So the best performing sector this year is, let's see, we got industrials. Communication services. Yes, communication services are up 19.7%, as mentioned earlier. So Google, right? Thanks to Google, comm services is the best performing sector. And technology. Technology is up 22%. So yes, you guys were absolutely right. Technology is number 1. Communication services is 2. And then you've got industrials up 18%. But what's really interesting is not what is up there, but what has come in at a very, very strong performance, which is healthcare, right? Healthcare up until the middle of this year, and I would even call it like up until the third quarter, it was one of the worst performing sectors. It was like down on the year, and now it's up 11%. So if you were to look at it performance-wise, over the last 3 months, 4 months, healthcare has really taken off, right? I mean, Eli Lilly, for example, has rallied over 76% in the last 3-4 months, and this is XLV. Since August, it's up over 28%, which may not seem like much, but it is a pretty substantial number given that it was having a pretty brutal year. And since August, XLK is up like 12%, right? So when you're comparing, yes, technology is up the most year to date, but last 3 months, healthcare is winning by more than double in terms of returns. So coming back to the question here, yes, money's been rotating out of technology, a little bit out of AI, a little bit out of growth companies over to some other parts of the market. But Eli Lilly starting to see that very nice bounce back higher, came back down to that support roughly at 977. And we're going to put up a resistance all the way up here at just about $1,111 for Eli Lilly. So that's going to be that resistance there. Yeah, you guys were... Okay, perfect. There was some issue with the microphone. Just reload, refresh, and it should work. Okay, coming back to the questions here. NVIDIA is a hold forever for you. What price would you take profits? So my question for you, for everyone watching, is anything a hold forever for you? Is any stock that you own right now, like in your portfolio, if you have a stock, is it a forever hold? Is it a stock that you would hold forever? And be honest, like I really want to know from all of you. Is anything that you own stock-wise or any investments is a forever hold? David says forever is a really long time. Yeah, I know. So let's call it lifetime, right? In your lifetime. So is it a forever hold? No. So a lot of people say no, right? Why? Because everything needs to be evaluated, right? Everything needs to have this constant monitoring, right? Because the moment you think that, oh, I'm just going to buy the stock and hold it forever, you are essentially not factoring in the only thing that is permanent, which is change. Everything is changing every single day, right? The only, what was the saying, right? The only, I forgot what it is, brain fart. The only state of permanence is change, or whatever that saying is. That's it. That's true, right? So everything is changing. So whatever stocks that we do invest in or we do decide to trade can never be a forever stock. The only constant is change. Dave, thank you so much. I appreciate that. So the only constant is change, right? So nothing can be permanent. In fact, nothing is. So we need to make sure that we reevaluate the story over and over again. Even if the stock is working out for us, if it's not working out for us, we need to evaluate how the business is doing, how the management is doing, what execution they're doing, how the quantitative analysis, like how the fundamentals are evolving for the company. All those things need to be studied. So to answer your question, NVIDIA for me is not a forever hold. It's only a hold for me as long as they're executing well, as long as I see the potential in that company. If I don't see the potential, if I don't see it executing well, if the management stalls, if there's complacency, if there's more competition, if there's any threats, I'm going to move on. I'm going to move on to something else, right? Because we are here to make returns, make money, not emotionally be attached to something. It's just a side benefit that, if the company that you are emotionally attached to performs really well, but it's not your guiding factor, right? It's not something you make decisions off of. So you only invest in things that make you money. You don't want to invest in things that don't make you money. So that's nothing's going to be a forever hold, to answer your question. Tesla time to sell, triple resistance 470. Yes, we are coming up to a very, very important resistance for Tesla here. So $470 we are coming up to. If you do get a breakout here, next target is going to be 474, 475, and a very strong support down here, 410, 413, down to 380s for Tesla. So yeah, triple top resistance. That is not a reason to sell. If anything, if there's a lot of volume and we get a breakout, there's more potential upside. We could see 500 for Tesla maybe this year. Who knows? It's only 9% away. And so just because it's coming up to a resistance is not the reason to sell unless you are trading this If you are trading this, then you want to be looking at taking profits at resistance, buying at support. So again, trading is separate, investing is completely separate. If you are trading, then yes, resistance we are coming up to, triple top. That's a good area to start looking at taking profits. What is your view on selling 1-year put options on a quality stock versus short-term cash to good put? So Anna, when it comes to selling puts, I like to not go too far out in expiration because a lot of things can change, right? A lot of things can change. So to give you an example, with covered calls, it's a bit different, right? With cash to good puts, I would not go too far out because your thesis could change, right? Just because you sell a put on a stock that you're really confident on today may not be the stock you would want to touch 2 weeks later, right? Again, coming back to the fact that the only constant is change. A lot of things are changing. So the longer you go out into the future, the less visibility you have. That's why interest rates are priced higher, right? Because the longer you go out the curve, the more uncertainty there is, the more risk investors are taking, and that's why they demand higher rates for that risk that they're taking. The shorter the time frame, the more visibility and the more certainty, and lower the rates and lower the returns. So with CSPs, I like to keep them shorter because my visibility and my certainty and my clarity on that stock is better versus if I go 1 year out. With covered calls, it's a little bit different. I already own the stock, and so I can sell a covered call 1 year out, and I can pick a strike where I would be comfortable selling my shares. So for example, with Tesla, what I am experimenting again this year is that I might sell a covered call 1 year out, December 2026, and I would pick a strike $800, $800 or $900. So in 2026, in the entire year, if Tesla doubles and gets up to $800, $900, that's a great gain. Like that position that I have will be up another 100%, and I'll still be collecting all that premium. But if Tesla doesn't double next year, right, which would be a very, very challenging thing, Tesla would have to go from $1.5 to $3 trillion business next year, then I keep the entire premium, right? And I still hold on to my shares. And if my thesis changes in the middle, I'm like, okay, now Tesla is really worrying me. I close my call for a profit and I close my shares for whatever price they're trading. So you're never really technically trapped when you're selling a covered call that far out, because if the stock goes up, great, you make profit on the shares, you collect premium anyway. Stock goes down, you make profit on the premium, and you can always close your shares if you want to, if your thesis changes. So with CSPs, I would not go too far out. With covered calls, yes. But CSPs, again, only selling on stocks that I really want to own long-term and companies that I'm really excited about. Okay. Your thoughts on Broadcom? Broadcom's part of the shopping list. It's a great company. It's a great management, fantastic business long-term. So it will continue to be on my shopping list. I don't have a position in Broadcom, but I do have SMH. So I do have a lot of semiconductor stocks that way. But I do want to start a position in Broadcom. In fact, it has been selling off, right? So down over 11%. We'll be looking at low 300s probably for Broadcom. What is the price? Shopping list price for Broadcom? I think it's a lot lower though. Where are we? Broadcom right here. So 215 lied by. It's pretty low. 183 is the fair value. So 50% needs to come down in order for this to be juicy. Wamsi, hi Karthik, what is the platform you're using to show all your positions? That's Thinkorswim. So Thinkorswim is what I use to trade. So that's all the positions currently on the options portfolio. And I do share this with everyone on the on Patreon as well, right? So if you go there, you'll be able to watch the latest, the big 5-0, week number 50, right? So this was week number 50, 2025 options portfolio update. Goes over everything. I just posted this 7 hours ago. You get access to all the positions, all my cost bases, all the P&L, showing you transparently all my everything is detailed out. My win percentage for the year, my overall summary. And the best part is that I am, for this year, matching the S&P 500 on beta. Like literally in terms of volatility, my portfolio is just as volatile as the S&P 500 this year, but with twice the return. So that, again, it's on paper, it may not sound as fun or crazy as it is, but it is something to take note of because it is important. we always want to measure volatility as well. People who don't measure volatility are trading blind. You would be trading blind because if you're not looking at your portfolio's volatility, you could be swinging like crazy, and that's not something that we want to do. We want a more stable, consistent gains. We don't want a lot of swings in the portfolio. We don't want to be like going up and down all over the place. We want like more stable and consistent growth, because it keeps your sanity in check. You don't want to be having gray hair too early. So, okay, let's do this. Let's go over to some more questions before the market opens in about 10 minutes here. And we'll take a look at some other stocks as well. Let's see. When you're looking at charts, EMA simple versus, no, that's the SMA simple and EMA exponential, when to use which one. So EMA is always going to put more weight to more recent prices. So if you are looking at the overall trend, right? If you're looking at whatever time frame, let's say 1 year or 6 months, and you just want to understand the overall trend for the chart, use the SMA, right? Because it's a longer moving average, and it actually puts equal weight to all the single prices. So it's showing you the entire trend. If you want to know a more recent trend, how is the price actually moving on a more recent basis? Because the recent the price, the more weight it's given. When you're using an exponential moving average, the EMA, that's when you would use an EMA, right? So if you're looking at shorter time frames and the more recent price action is what you want to put more weight into. It's going to give you a little bit of an idea, okay, kind of like the hot streak of the stock, like how well is it doing more recently compared to a longer time frame. Ken, yes, called NVO, PG, and Lulu early last week. Seems like we're going to make some big moves in all these stocks. Thanks for covering it. That's amazing. That's great. Those are stocks that are actually moving 100%. All right, Tesla forever. So again, any company that's going to keep performing is going to be the one worth holding, right? Because that's how it is. That's the nature of business, right? In general, like complacency is very much of a cancer, right? For any business. Like you don't want to be complacent because then you become irrelevant and you go out of business, and then there's new competition, there's new change, there's new evolution. So there's a lot of things. Okay. Nothing forever, but some stocks like Google till it meets its competitor. Yes, again, anything can happen in the future. Biggest eye-opener is the 10 or so Dow 30 stocks that have gone bankrupt. Yes, I mean, a lot of stock, like if you look at the Dow 30 20 years ago, it's different than what it is today. Same with the S&P 500, right? Companies come and go, and that's the whole point. And Warren Buffett explained it really well is when he held up a chart of the top 10 largest companies in the US back when it was a shareholder meeting from the 1980s, I think. And then obviously when you look at it 40 years later, not a single company that was on that list is on the list today of the top 10 companies, right? So that tells you how much and how quickly the world is evolving into something new. And the largest and the biggest companies of today may not be on that list maybe 30 years from now. There might be MoneyVest. I'm just kidding. But there might be some other companies, right, that are the largest and the biggest in the world. And so it just keeps on changing, right? That's so important for us to always keep that perspective. What's your thesis on iron? Is it a long-term hold for you? So it's not necessarily a long-term hold, Dave. I would say like it's a more mid-term hold because I do think that right now there's a huge supply glut, right? There's a big constraint with supply for AI compute. Iron is one of those companies that has been at the right time, right place at the right time. And the fact that they're doing it at a renewable sort of space where the cost is really low is where that moat comes in. But the only thing that I worry about is if there will be an equilibrium between demand and supply 2 to 3 years from now, where there's an oversupply of AI compute and data centers and there's not enough demand. I doubt that's going to happen, but there is a possibility for that to happen, right? Because a lot of these companies are investing heavily to build out all this AI infrastructure. The demand needs to come through, right? The demand needs to come in with that. So if it doesn't, then of course, that's the risk with iron. So every company has risks. Iron's risk is the long-term demand factor for AI compute. SoFi and PayPal, S&P might be since it's managed ETF. Will you suggest to sell AI stocks as the market is pivoting? Not really, no. I mean, so there's never going to be a sell signal for me just purely based on what the market is doing. Your sell signal on any stock should always be stock specific. If your thesis is dead, if this company is no longer performing, you're like, I'm not convinced in this business anymore. If you find a better opportunity, right? You're like, okay, I have a better opportunity to put my capital into. I'm just going to rotate it out of this investment into something else. And the third is that you just really need the money for something else. You really need okay, I need this money, putting a down payment on a house, buying a new car, furnishing your home, whatever it is, you need the money. The sell signals are a lot less frequent than buy signals, 100%, right? And you'll kind of see this in the Discord as well. And every time I share alerts, I don't sell as much as I buy. I rarely would sell, right? Because again, it's as long as things are working, the companies are performing, I am a net buyer. I would keep buying. I would rarely sell. So just because the markets are pivoting or they're kind of going away from growth or technology, it's not a reason for us to sell. If anything, it's a reason for us to buy more. We're getting good deals because we know that capital is rotating out of technology right now, but where is it going to rotate back when it's looking for growth? Are we going to grow in defensive stocks? Are we going to grow in utilities? Right? Those are not the growth levers of anyone's portfolio. So you always have to think, markets shift from a growth mindset to a safety mindset, and it keeps swinging back and forth, right? Because what do hedge funds and institutional managers, what do they want to do? At the core, they want to protect capital. They want to protect capital, and that's when they can worry about growing capital, right? So, and as Tom Lee puts it really well, is that they fire before they aim, right? So they fire first, aim later. And that's what they do. They sell first and decide later. And so when they are selling growth and going into safety, they're doing it purely from the perspective of capital preservation. They want to protect capital. But if they want to grow, where are they going to go? They're going to go back to growth stocks. So that gives us the opportunity for us to take all those deals, which they are selling. They're selling good quality stocks, right? We can just come in and buy them up and get in early before the institution comes in. This happens over and over and over again. This happens all the time. All the time it happens. We just have to be ready for it. And hence my constant messaging of just being cash ready, and be prepared. Because when the opportunity does come in, we just have to be deploying capital left and right. All right, everyone. So market's going to open in about 2 minutes here. QQQs are up over 60 basis points. We got the S&P up over 0.5%. Tesla's pushing up over 2% as well. Nvidia's up over 1.4%. Dave says we need MoneyVest to go public. One day, fingers crossed, one day. So you've always said we buy for only one reason, but we sell for many reasons, 100%. We could be selling for multiple different reasons, but we buy for only one. We expect the price to go up. So that's why for insiders, when they are buying, is more valuable data point than when they're selling. Selling is almost irrelevant because these are pre-planned sales. These are options that are exercised. These are, events that have already been directed on, from their attorneys and whatnot, already pre-planned well in advance. So a lot of the sell signals from the insiders are not as important as when they're buying stock. When they're buying stock, they're buying it for one reason only. Same with corporate, repurchases as well. Companies are buying back because they only see their own company as the best investment out there. That's why I put so much emphasis on stock dilution as well. Because if the companies are buying back their own stock, they believe in their own future. Because company also has a lot of cash, right? Companies are literally just like individuals. They also have capital to deploy. Wouldn't Nvidia and all these companies sitting on $50, $100 billion, wouldn't they love to just invest it in the S&P 500 and make a lot of returns, right? They would love to do that, right? They would love to just have someone manage all that money and generate a lot of income. But when they are doing a lot of buybacks, when they are buying other companies, they're doing it for a reason because they actually believe that that's where the maximum opportunity is. That's where they can deploy capital efficiently and achieve a lot of return. Buying more valuable than selling as an indicator. So, okay, market's gonna open soon here in about a minute. Hope you all are ready for this Monday morning. Just a couple more weeks left. We are in the final 3 weeks of 2025. Discipline, consistency, risk management, all the key ingredients to close out the year strong. And this week we also are packed with unemployment and inflation. So both of those things, very, very important stuff coming out later this week. We are open for business, everybody. Officially, markets open. So QQQs are indeed higher. Again, the plan is going to be to close out my covered calls on a lot of these stocks here today or tomorrow and open new ones on those, as well as Meta as well. And then Tesla, kind of a long dated option that I'm looking at, which is going to be 1 year out once again. I did it at the beginning of this year. We're going to do it again towards the end of this year or beginning of next year as well. So thank you so much for joining, everybody. Hope you all enjoyed. We do go on different tangents from time to time talking about different stuff, but I really appreciate you all spending the morning with me. Link's going to be down below if you're interested in joining. Again, there is a 40% annual discount for Christmas, for the holidays, so you can take advantage of that. Trade alerts, members only videos, portfolio updates, options portfolio breakdowns, everything's going to be available with the Discord access and the web and mobile MoneyVest website access as well. So link's going to be down below. I'm also going to paste it in the chat. As always, happy investing, happy holidays. I'll see you all in the next live stream. Take care.